Hong Kong just launched the world's first Solana ETF. Fidelity, managing nearly $6 trillion, open sold to every U.S. brokerage account. Wall Street is building physical presence in Manhattan, while price sits at $200. Most people see institutional adoption. I see something different. The technical setup right now mirrors the exact conditions where I've historically added to my position. This is the 6th time I'm covering Solana on this channel, and if you missed my entries around 120, this breakdown is critical. Let me show you what's actually happening on the chart and why the next few weeks matter. Let's talk about what changed this week. The Hong Kong Solana ETF is live today. That's the first exchange-traded fund for Solana anywhere in the world. More important though, Fidelity just made SOL available to U.S. customers. We're talking about the asset manager with $5.8 trillion under management. Regular brokerage accounts can now buy Solana the same way they buy stocks. And they're not stopping at digital access. Solana now has physical retail space on Wall Street in Manhattan. The message is clear. Now Solana on Wall Street, next Wall Street on Solana. All right, let's get into the chart because this is where it gets interesting. I'm looking at the weekly time frame, and we're trading around $200 right now. I've got my Fibonacci retracement anchored from the January all-time high at 296, down to the April low at 95. The 1618 extension sits at 420. That's my biggest profit-taking zone. Price tested the ascending wedge support for the 3rd time in 3 weeks. Each touch increases the probability this level holds. My accumulation zone, the green box, runs from 170 to 220. We're right in that pocket. Price action is above the 21, 55, and 100 EMAs. The blue, purple, yellow lines show we're in a confirmed uptrend structure. The 10 EMA is the key resistance right now. Price needs to reclaim that level to continue expansion. If we do, the path toward 300 opens up fast. Volume profile shows point of control at 145. That's the magnet level if we lose support. Short-term traders, a weekly close below 165 invalidates this setup. For my long-term position, I'm holding regardless. If we do break down, I'd add more around 140. Risk-reward at current levels favors accumulation. The Fibonacci RSI just entered neutral territory and seems to be bouncing from there. My take-profit zones are marked at $300, $420, and $620 if we break the wedge to the upside. I'm trimming the most at $420. As soon as I hit the first target at $300, my stop-loss moves to break even. That makes it a risk-free trade from there. The development activity tells you where smart money is building. Solana leads with a development activity score of 96. Wormhole, Drift, Swarms, Peath, they're all showing consistent GitHub commits. When development stays strong through price corrections, that's how you identify real projects from dead chains. Solana's co-founder just pushed back hard on the Layer 2 narrative. He's saying the claim that L2s inherit Ethereum security is wrong. 5 years into the roadmap, Wormhole on Solana has the same risk profile as ETH on mainnet, but generates comparable revenue for staking providers. That's a direct shot at the Ethereum scaling thesis. Worth watching how this plays out. Solana Foundation dropped new open-source tools. Launch, Cora, and Commerce Kit. These are developer tools that compress the time to ship products. Gas abstraction and seamless payments are now built into the infrastructure. The easier it is to build, the more applications we'll see. Majority, the Neobank, just integrated stablecoin transfers powered by Solana and Privy. Over 250 million people live away from home and send money back weekly. Now they can do it instantly and for free on Solana. That's actual utility, not just DeFi speculation. If you found this breakdown valuable, hit the like button and subscribe. Join my free Telegram group. Link is in the pinned comment. You might want to check out my 2 previous Solana videos. Links are on screen now. I'm holding my position and adding at these levels. The technical setup, institutional flow, and ecosystem growth all align. Thanks for watching. Never financial advice. See you in the next one.